Welcome to our Proactive Tax Planning Workshop. I'm Paul Hutton, President of Hutton Wealth Management, and today I'd like to share with you some tax law changes that President Biden proposed during his presidential campaign and what that could mean for you. There's so much information out there to digest, so my hope is to simply try to bring it down and bring out some key items that I feel would be very important to my clients. My goal is to help you make a path toward financial goals more tax efficient. So we need to be aware of any potential tax law changes that may be coming up over the next couple of years. This is merely a non-political summary of what was discussed and is only intended for informational purposes only. So let's get started. Before I begin, I find it always important to review the 5 key areas of financial planning. They are preservation planning, retirement planning, tax planning, estate planning, and investment planning. Even though today's presentation is focused on tax planning as a comprehensive wealth manager, we try to always take into consideration the impact not on just one of these recommendations, but on all of these areas for our clients. Let's get started. The 46th president. During his campaign, the now 46th U.S. President Joe Biden released a proposed tax plan with a key focus on higher taxes for wealthy and corporations. While these proposals are not yet law, it could still be helpful to be aware of them. So if they are considered, you can be better prepared. This workshop will look at some of the proposed changes that he talked about during his campaign. President Biden proposed increasing the corporate tax rate. Under the Tax Cut and Jobs Act, the peak marginal corporate tax rate was reduced from 35% down to 21%. Under the Biden tax plan, the corporate tax rate would increase to 28%. Also proposed is an increase in the marginal tax rate for our top earners. Now this gets pretty complicated. I'll try to make this as simple as possible, which we defined as individuals making over $400,000. Biden's tax plan would raise the top marginal income tax bracket from 37% to 39.6%. The Tax Cuts and Jobs Act lowered the top marginal bracket from 39.6% to 37% in 2018. The proposal was non-specific, but here's a visual of what a married filing jointly tax brackets might look like if this happens. Biden's proposal calls for a lifting or a raising of the capital gains and dividend tax rates on filers with incomes above $1 million. In income to pay ordinary taxes on their dividends and capital gains, no matter how long they've held these assets. This would imply that larger earners or large gains could see those rates, usually taxed advantage, rise to 39.6%. Here's a visual of what capital gains rates might look like if this happens. Instead of 3 rates, there would be 4. Biden's tax plan includes a cap on itemized deductions above 28% for those with earnings more than $400,000. This means for each dollar of itemized tax deductions, including charitable contributions, a taxpayer or couple filing jointly would only receive a maximum benefit of 28 cents on the dollar. This 28% limit would hold true even if the filer is paying at a much higher marginal tax rate. For example, if this were enacted and you have $40,000 in deductions, then even the highest bracket, you would only save 28%, or in this example, $11,200. Wow. Biden's tax plan would phase out small business income deductions for taxable incomes over $400,000. This is a very complicated piece of legislation, to say the least. And his proposals did not share details, but we still need to acknowledge it. Proposed in this elimination, and this is probably one of the biggest ones that's going to affect a lot of people that maybe have parents that are farmers, or your family had farmers or ranchers and things like that, but there's a proposed elimination in step-up in cost basis. Biden's tax plan wants to put an end to that step up in cost basis. A step up in basis is a tax law that applies to estate transfer. When somebody inherits investment assets, the IRS resets the asset's original cost basis to its value at the date of the inheritance. The heir then pays capital gains from their basis. For example, if an individual invested $300,000 marketable securities positions that's worth $500,000 at the time of their death, they would have to pay their heir would pay capital gains on anything over $500,000 if the position were ever sold. This is because they receive a step up in cost basis. If Biden's tax proposal were to become law, heirs would not inherit a step up in cost basis. And if they liquidated the position soon after receiving it, they would realize $200,000 of capital gains if they sold that $300,000 position worth $500,000. That's staggering. Thinking about people that own property, land, and things like that could have a devastating impact on families. One of Biden's more talked about tax plan changes is to significantly reduce estate tax exemptions from the current $11.7 million per individual back down to $3.5 million per individual immediately. This means estates that are valued over that amount would be subject to an estate tax. This is something that those who have large estates should be very aware of. Albert Einstein said the hardest thing to understand in this world is income tax. And Will Rogers said the difference between death and taxes is death doesn't go away or get worse every time Congress meets. Biden's proposed plan could change tax laws with a focus on taxing corporations and high-income earners. With both a Democratic House and Senate, Biden's proposed changes need to be watched very carefully. As of now, tax changes move and were not expected immediately, as the administration has initially focused on getting the pandemic under control. As we're keeping a watchful eye on on all of these changes, these things could affect you if you're not careful. We believe that taking a proactive approach is better than a reactive approach, especially regarding income tax strategies. If you have any questions, please give us a call. So what can you expect from us? You can expect regular communication, more frequent discussions, and you can expect we are continually reviewing economic, tax, and estate and investment issues for our clients. I want to thank you for your time today. Remember, your health and well-being is our highest priority. We appreciate the opportunity to assist you with your financial needs. Now, I need some help from you. Can you help me in 2021? In fact, I would be honored if you could share the names of some friends to send this video to or add to our mailing list so that they can benefit from this information. Thank you so much again for your time today, and remember, a proactive approach can many times lead to better results than a reactive one.